Okay, hi traders, here's a new video. First of all, the risk warning: your invested capital may be at risk. Don't trade with money you cannot afford to lose. And this video is not an investment advice. So this video is another candlestick chart analysis video, and I'm gonna show in this video which kind of trading setup I would trade. And which kind of trading setups I would avoid, and all those things based on the past of this chart. But you need to understand those things before, as this kind of things which I have explained in my ebook. So get this ebook. It's for free. You'll find the link in the description. This ebook contains the most important candlestick pattern, chart pattern, binary option, turbo trading concepts, market condition, trend identification, rejection, and candlestick math, and a lot of more concepts which can be used also for Forex and digital options. So get this ebook. It's for free. You'll find the link in the description. And in the description, you will find also the link to the Facebook group. I can only recommend to anybody to join this Facebook group. It's really worth it. My Facebook group staff is really amazing. They are doing a great work, and they will apply and provide you with more information and material. So get this ebook, join the Facebook group. Don't miss this opportunity. So let me see, I will do a put here. This is preparing for a put. I'm preparing now for a put because this kind of area was before a resistance area. So let me see, we are in a downtrend, yes. So I will prepare here to do a put on this on the next candle, if this will be a doji. So let's see. No. So let me see what's going on. It's looking like a fake breakout. Yes. And I will do a put anyway. Yes, if I see a nice rejection now from this area, because we are still in a downtrend, and I'm expecting that price will reject from there. So, okay, I'm going to put now. Okay, I got the baddest, the baddest entry point ever, yes, but no problem. I'm pretty much sure that this will be in the money because the rejection from the 20 EMA was strong. We are still into a downtrend, and so I'm pretty much sure that this will be in the money, and so I'm calm. So, and after this trade, I will show you some other trades which I would have done. Yes, some of them I have already done on my real account trading. Yes, I will provide you also with some new real account videos soon. So let me see, I will do another put now, because this candlestick is now telling me that what I was expecting. Yes, that we're heading down further. Yes, okay, I'm going to do a put now because I'm expecting that price will go down further. So we will remove this kind of line, which is completely useless. But you see, we have a downtrend, and so you can do nice trades on the 20 EMA in direction of the trend. And that are those kind of trading setups which I prefer when I'm doing those kind of trades, because they are those things which I have explained also in the ebook, which are based on the key level, the trend, and the candlestick pattern and the rejection. Yes, and that is the 80% success rate of those trading setups, and that is one of those, and I have shown you this now again. Yes, only based on the 20 EMA. Yes, and that was this one. So let me see if I can show you now some other trades which I would do. For example, let me first of all remove this. So I would do here in this kind of scenario. Yes, let me do it. Oh, I have see here, we had here. So first of all, only to make it clear. So we got here a double top. Yes, this is a double top. Yes, where the second top is lower than the first top, and this is the neckline. Yes. So after this double top, you get a downtrend, a strong downtrend, and that's the reason why I would have done this kind of trade here. Not this one, this kind of trade here, this candlestick, yes, without any kind of rejection. I would enter immediately after this kind of trade here, because it's close to the neckline here, yes, and that means to me that the trend is strong, yes, and that candle here is, like I hope I have explained so often, a continuation of the trend, yes, downtrend. So that was this one. Then I would trade also this kind of candle here, yes, after the up downtrend, strong downtrend would finish, and that is a reversal. you can expect that it's going up again. Yes, that there will be an uptrend, and this uptrend finished here with the trades which I have done before. Yes, because this was what I was expecting. So then I would do another trade, and that is this one. Not this one, this trade, yes, after this kind of candle, yes, which because this candle is a signal that we are going down when it's appearing at major key level in this scenario. Yes, after a uptrend, yes, you can expect and you enter here on the rejection of this candle, yes, and so you get a nice in the money there too. So then I would do also this kind of trade here, this candle here, yes, of the rejection, because this candle is for me a clear sign that going up, yes, but you should have a good entry point, maybe on this level here, rejection from those candles. That is how you have to do this. And then I would probably doing also this kind of trade, yes, because this candlestick here, this doji, yes, it's not a hammer, it's a doji, because if you understand this, because this candlestick is telling already that we are going up, that it's this is one of those candles which are showing that they're coming up. And if the next candle is a green one, yes, and got such kind of buying pressure here from below, this means we have a lot of buyers. Because first of all, the sellers press down this price down to this level, yes, and then the buyers pushed it up to get a green candle. So you can expect on the next candle that will be also a green one. And that's the reason why I would enter into a call here on this kind of candle. So let me see if I can show you some other ones here on the next one. So I would say 1 minute, I have to open the door. So I'm back. And then I would do probably this trade here too. Let me see. Let me explain this. After this kind of consolidation here, this kind of consolidation, yes, I would, after we broke through the 200 EMA, this kind of candle, I would enter this kind of candle, because this candle here would telling me that the downtrend will continue, but important is that you do this after a uptrend, and then you got this downtrend. But here in this downtrend I would probably not trade here, because there is no kind of rejection, and I would trade them maybe if without any kind of rejection. But I want to show you here only those ones which are really good, and this one which you should get in your arsenal, yes, of your weapons, and not every kind of candle, because obviously here would be also some kind of trade like this one, for example. But I want to show you only those ones which I would choose when I'm doing my real account trading. So then we got here a rejection from the 200 EMA, yes, and so I would probably enter into this trade here without any kind of rejection. But this is a 200 EMA, yes, and the 200 EMA, if you get there a reversal, it will maybe hold more than 1 minute, one candle, yes. That is what I'm telling you all the time on the other videos, yes. If you get a reversal at the 161.8 Fibonacci level or 261.8 Fibonacci level, you can almost expect that it holds more than 1 minute, more than one candle, mostly 2 or 3 candles. Or at the 200 EMA, it holds also more than one candle, 2 or 3, yes. And that is what I'm doing then when I have a reversal happening like this one here, for example. This is a clear sign of a reversal. This is a clear sign of reversal, so you can enter immediately on the next candles, because you know that this reversal will not change immediately, yes. Here, this was a consolidation area that could be a tricky part, yes, but that is how I choose my trading setup. So, and then we have here this kind of trade here, which got after this kind of engulfing candle, which I have shown you so often. Then I would do also probably, if I have nothing better to do, the trade here, this one here. Let me see, after the 100 EMA is broken, this engulfing candle here with a combination of an inverted bullish hammer here, yes, that candle here I would enter into a trade in this candle, yes, probably so, and that was it already, yes. Then I don't see any kind of other trade. Maybe I would trade also this kind of candle here, because this candle after the reversal here, yes, would be a good trade too, yes, and that's it. So, and then you get almost a few trades done. So here, this is a trade which I would do also, yes, but I would try to get a better entry point and wait for the most original, because we have here some kind of here round number, yes, and so I would wait for a rejection from this round number and enter immediately. I would not enter immediately here because the 20 EMA is too close, and that would be not a good sign to enter immediately. But if I would get a rejection here from below to above, I would enter into this trade. So I would say that would be enough. I have explained almost all those nice trades which I would have done. As you see here, in 1 hour you got already 1, 2, 3, 4, 5, 6, 7, 8, 9, yes, 10, 11. So so you get almost every 5 minutes one trade, yes, and that is how you have to trade. Obviously, you don't have to do so much if you are not comfortable with it. Yes, I do also only a few trades daily. Yes, but those few has to be really sure, and that is what's about. Yes, and that is how you have to understand the candlestick pattern here, which I'm showing you. Like this one, the hammer. Yes. The inverted bullish hammer engulfing candles, yes, that are only based on this. When you have to understand the reversal here, which is coming up, yes, and then you can trade those kind of scenarios also easily. So I would say that would be enough. If you like this video, do a like. If you didn't subscribe, subscribe. And if you have something to say, let me there a comment or join the Facebook group. So I would say stay safe and bye bye.